Now it is time to meet our keynote speaker, who has been an entrepreneur since 1987 and is the founder and principal of 3 financial services firms. His distinguished IRS career included corporate and tax-exempt auditing, tax law. He has also held numerous management positions in the IRS district, regional, and national offices and service centers. He also served as a national leader of the High Visibility IRS Compliance Program. Our speaker currently lectures on tax, business, and financial management topics. And in addition to that, he has presented small business administration seminars in the areas of management and nonprofit operations. He is a member of the Metropolitan Washington Council of Governments, the American Bar Association, the National Bar Association, the Montgomery County, Maryland branch of the NAACP, and other professional organizations and government agencies. Finally, he is a member of the Maryland Society of Accountants, the Institute of Management Accountants, and the National Ethics Association. Ladies and gentlemen, please give a rousing welcome for Mr. Donald Carroll Moragne, a friend to the small business community.
Thank you, Tia. You gonna hold the mic to the audience?
I can.
Okay.
Okay, because you're mic'd up. Okay.
Hello, everyone. Thank you for coming. I think I've met almost everyone, but I will meet everyone before I get started. Let me just say we're not going to be able to cover the entire discussion today. We've got about an hour to talk, but what I want to make sure is that we all leave here with some serious takeaways. I want this to be a session where we begin to think outside of the box and think about where our businesses are going to be or where we want them to be sometime in the future. We're talking about taking your business to the next level, which presupposes that we have to be at some level to begin with in order to go to the next level. And so let's form a context. Let's have a discussion. Tia's got a mic, so I encourage everyone to, when you have a question, please, this is participatory, okay? It's not a lecture. I want to make sure that we're all talking together and learning together, okay? So first of all, business owners. How many of us own businesses? Fantastic. 5 years or less in business. Great. 10 years? Good. 15? 20? All right, I like that. So when we go into business, our primary objective is to provide to the public skills that we have or skills that we believe we have that are going to generate money and do good things for the public. Is that right? We want to make money and we want to do well for everyone else. That's a good thing. But when we start our business, what we want from that business is for it to also provide us with a living. Is that great? If that calls for me, just tell them I'm busy right now. And so I propose that at the very first level that we need to discuss before we even go to the next level, that we need to look at it in economic terms. Being in business, in my perspective, is all about economics. Is anyone thinking that you're in business because you want to do good for the public? Yeah, raise your hand. Yeah, there we go. Don't be shy. That wasn't a trick question. The trick questions come later, okay? But while we're doing good for the public, we also want to be able to feed ourselves, feed our families, take care of our economic responsibilities. Would you say that? Yeah. And we also want all of those things to be provided by our business. We're doing good things for the public. We would expect that at some point in time, our business would allow us to live well. True? And so at our first level, that's where we start. That's what we're looking for. We're looking to begin to provide services, but for that business that we're starting to be able to allow us to live. Would we say that? Good. What would be our next point of contention in our business? Wouldn't we want it then to move from, please? Hello, Alexis. Alexis. Do we need a mic, Kurt, for Alexis?
Okay. I'm sorry, I was so fast. That's where I am, to be able to provide employment to those in the public. That was my whole point of going into business.
Okay. And when you say employment for you, employment for other people?
Oh, employment for other people.
Okay. All right. We're going to get to that. All right. Alexis is a plant. I want you to know that right now. Okay? After we have that living, what we're looking for then is for that business to provide us with some level of financial security. Would you agree with that? Okay. Now again, we're setting the framework now, so I need to know whether or not we're all on the same page here. Services that we can provide to the public that generate revenue, that have a business that allows us to have a living, our families, but then allow us to move from that living to financial security. And financial security, just for the sake of this discussion, is when we don't have to worry about where the next dollar is coming from, okay? After moving from financial security, what would be our next step? I'm going to tell you. It's financial independence. We want our businesses to be able then to put us in a position where we don't have to worry about where our next dollar is coming from or where the business's next dollar is coming from. I propose that that's the first level that we should all be thinking about, or our businesses should now enjoy those kinds of rewards for us in order for us to begin to think about what is next. So, while we're talking about that, everyone here, we had some folks who've been here in business for almost 20 years. I don't need names, I don't need numbers, but I do need some participation. Do we think that we have a business right now that's at the stage where it can provide our personal living, our personal financial security, and also our personal and business independence? How many folks think that they are at that point? Okay. So before we talk about the next level, which is about our business building wealth for ourselves as shareholders and for itself as a value, we need to then concentrate on where we are now. Now, one of the things that happens is we're so busy trying to build a business, make the money, provide the services, keep the business going, that we don't really have a chance to stop and think about ourselves in long-range planning at the first level. We don't. We're trying to run a business. It's nice to talk about planning, but when do you get time to plan? You know, after you sleep and you eat and you work all day, seriously, when do you get time to plan as a business owner at the first level? But you have to. You have to be able to carve out that time, because if you're always working, you're not thinking, and if you're not thinking, you're not planning, and you'll never, ever get from the first level to the next level. I contend, and I'm sure Sheree can agree with me, that most businesses don't even reach the first criteria of being able to provide a personal living wage for the owner. And why is that? Again, we don't have the ability to plan ongoing. So we go to SCORE, we go to SBA, we get our business plan done. It's gorgeous. We go to the bank. The bank loves our business plan. They fund us. After that, we are so, trying to find a nice word, we are so dedicated to making sure that we stay in business, pay back that loan, do all the right things that we're supposed to be doing in business and have been taught to do in business, that we really don't think about what the future holds for us. For most of us, we say we are going to take care of our plans for ourselves, for our wealth, at some point in time in the future. 3 years, 5 years, after the next big contract, whenever. But it's always we take care of ourselves in the future. If we're able to take care of a wage just to let us crawl along and maintain our bills, we're normally happy because we feel that at some point in time in the future, something's going to happen. We don't know what it is, a gigantic contract. Something's going to happen that's going to change our fortune. And that's external, isn't it? When actually what I'm trying to advance right here is that we have to take our futures and make it internal. We have to start thinking that this business that we have has to provide for us, living wage, first thing, personal financial security, second thing, and then thirdly, personal financial independence. That is the first level. And we don't think about our businesses from that perspective. And so I want us to now change our focus, change our context, and let's look at our discussion today purely from an economic perspective. I don't really want to know what you do, who your clients are, how much revenue you generate, how many employees you have. What I want us to think about is, I started this business. I started this business for a purpose. But that purpose is now not altruistic, it's economic. I've got to live. My family has to live. I need to be able to live well within my means, but well, to make it all worth it. And then at some point in time, very soon, I need to be able to know that I don't have to worry about my financial security. I don't have to worry about the future of my business. And also that I know when my golden years come, that I don't have to worry about money then, outliving my money. And so while that's a long way away, and traditionally we leave it for later because it's a long way away, I need us to begin to think about it at this level right now. It's been my experience, both personally and as a CFO, that when I walk into a business, we start talking about how do I make money now? Good discussion. That's where we should be. The next year, we talk about how well have I been making money? In the third year, we talk about, now how can I take some of that money and put it away so I'm not spending all my money? But unless we actually put it on the agenda, the business owner never brings up the discussion, Moragne, how do I get rich? Moragne, how do I make this business make me wealthy and financially secure? Moragne, if I put my money in the stock market, will it do well? If I put my money in an annuity, would it do well? If I hit the lottery, would it do well? But the question never comes up, how do I make this thing that I gave birth to, that I live and breathe every single day, that all my resources, all my sweat, all my blood, everything is in, how do I make this thing turn me into a wealthy person? That's what this entire discussion is about. That's the next level. Wealth is the next level. And so I want to define that before we can even talk about the next level, we have to make sure that at this level, we have the things in place to at least provide us personal financial independence. And once we're there, we can start thinking about what's next. Now, the context of this is normally, where are you now? Well, I'm doing really well in my business, and I want to grow my business. Or I'm doing really well in my business, is growing, and I want to have 19 offices. That's not economic. That's business. That's going concern. That is another discussion that we can have. But at this level, for this level, we need to talk about how do you take care of you and your responsibilities from what we're doing every day. Is that a good context in which we can start? Okay. So I contend that the business plan is the most important document that a business owner and his advisors or team of advisors can put together. It is a roadmap. It is, I'm here, or I want to be here, and I want to get over there. How do I do it? What are the milestones that I use to measure how well I'm doing? My wife Brenda has a book called Magnetizing Unlimited Abundance, and in it she uses a car as the vehicle that people can use to get to abundance. But she talks about getting the map first, looking for the hotels, where you're going to stay, learning the route, where the restaurants are. I mean, that's the business plan. It is your ability to sit down and with assistance, and I'm not talking about hiring somebody, I'm talking about doing your research, your marketing research, your demographic research, your competition research, with assistance, being able to say, this is how I plan to get to that door within the next 5 minutes. I'm going to walk straight or I'm going to walk crooked, whatever happens, and if I walk straight, it's going to take me 3 years. If I walk crooked, it's going to take me 4, and I know that I'm getting there because once I get to Scott, right? Once I get to Scott, I know I'm halfway there. If I get to Ani, I'm 3/4 of the way there. And once you put that business plan together, you have to use it as a monitoring tool. Don't write it and put it away. When you get to Scott, look at your business plan, and it says, I'm half the way there. Are you really? Are you at Scott and not half the way there? Are you at Scott and 2/3 of the way there? Did you not make it to Scott? And why? It's our time to take our roadmap and figure out, are we realizing it? Are we achieving it? Does it need to be modified? Do not be afraid to change in business. The course that you're on today may not be the course that's destined. Do not be afraid to change. And I know that's a digression, but I need to stop there. Also, do not be afraid to fail. Failure is a chance to do it right the next time. Do not let those words govern your life. Trust me. I have 3 companies now, but none of those companies are the ones I started in 1987. And why? Because things happened along the way that made me smarter, made me sadder, made me richer, made me poor. And the first time that I went through a recession, 1990, I had never been through a recession before, because before that, I always had a paycheck. So when you have a paycheck, what's a recession? I don't know. It's something you read in the papers. But when you are in business, you are on the economy. And everything that happens, no matter where it happens in the entire world, impacts your dollars. You may not see it, you may not know it, but I need you to begin to realize it. Everything that happens anywhere in the world impacts your dollars. So before 2008, when everything fell apart, the first time in my life it fell apart was 1990. I had 20 people on staff. I had money that I owed to the bank for accounts receivables, which I was using to pay payroll, planning, doing right, surgeon heal thyself. When that recession hit and it was really hard to make payroll, the first thing I thought of is I failed. I've been doing this 3 years and I'm about to go bankrupt. The fact that I took the time to feel sorry for myself was time that I lost in getting back to where I should have been. I was fortunate enough to have my business coach who said, wake up, let's get back to work, okay? No more meandering around. And let me tell you, once I did that, I wrote this poem, which I'm going to read to you. It was written in 1990, and it goes, I built it. From nothing, I made it real. I sacrificed and toiled to achieve my ideal. I put my skill and talent into every facet. It is all that I am. It's my most prized asset. I shared it with the ones who have shared the most with me. My talent and success is possible because many believed in me, but I built it. Every one of us in this room can say that. Whatever business you are in, no matter who helped you, no matter who is helping you, no matter where you go, it is your prized asset because you dreamed it, you developed it, you created it, you built it. Now we have to make sure that it stays, becomes a going concern, and that we profit from it personally and our families. I built it, you built it. Can we say it together? I built it. Fantastic. So, don't be afraid of change. Don't be afraid of failure. Let's keep moving. Back to the business plan. Thank you for that question, Peter. The business plan becomes important because we then have to find the time to stop thinking solely about the business continuing and to plan for the business to continue. Now, I want to make a distinction here. On the next level, while you're still planning, you're strategizing, you're future thinking, which means that you're thinking out 20 years, 30 years, longer for what you want to happen after you reach the next level. You're thinking, how do I get my money out of the company when I leave it? I'm going to leave it to my kids. I mean, we're thinking long range when we're strategizing. And when we're strategizing, we're looking at what's happening everywhere in the world. When we're business planning, we're looking at our immediate situation. We're looking at where our money's coming from next. We're looking at where our money's coming from the next 15 months, 12 months, 24 months. That's planning. But we don't get time to plan because we're so busy trying to make sure that the company is running. I'm asking every one of us to begin to think about, how do I carve out the time to do the planning that's going to assure that at this level, I am getting, number one, anybody? Personal living. Number two, personal financial security. Number three, personal independence. Okay? I'm going to keep asking you because I need you to be there. I need you to be there with me. Okay? In this presentation, we're probably not going to get to the next level. So tell Sheree, tell Tia, we'll come back, we'll get to this. If we leave today and our outcome today is that when everyone leaves that door, they're talking about personal independence, we've achieved our discussion today, okay? That means that we have the ability to get to the next level. If we don't achieve personal independence where we are now, the next level is a dream, and probably is a dream that's not going to come true. And I contend that businesses don't fail because they're undercapitalized necessarily. Businesses fail because the business owners don't realize that that is an asset that they have that has to be managed. Asset that they have that has to be managed is an economic asset, which means that everything that happens to the economy outside impacts the value of your asset, and that you are an asset manager. Business owner, yes. CEO, yes. President, yes. Asset manager, absolutely. And what we want from each one of our businesses at the end, when we either sell it to someone else for a lot of money, transition out and leave it to our next generation where they have a jump start on their economic futures, merge with someone, whatever. That's the exit plan. That's the game plan. But before that, we have to do things that are absolutely mandatory at this level. Now, I'm going to embarrass her because I didn't know she was going to be here. And I'm not going to look at her because if I look at her, she's going to do one of these, and then I'm not going to call her. But there is a business owner in this room who is probably the smartest individual I've ever met. And I mean that very seriously. And why do I say that? Because as CFO, normally I'm the smartest person in the room. And I don't mean that immodestly. That's why they hire me, okay? I'm the smartest person in the room. My job is to guide the business to the next level. What rarely happens is when you interact with a CEO who is smarter than you, who challenges you to make them better, thereby making you better. That's what happens. And this lady just sold her business. I'm not going to tell you how much, but I would love to be her. She sold her business, and not only has she sold her business, but she had other businesses which she is continuing to run. And so she's not out of business. She's just one of those people who started at this level, went to the next level, realized the economic value at the next level, and she's doing it all over again, which is a sign of an entrepreneur. So definitions, and I hate definitions, but let's do this. Business owner, we work hard every single day. Entrepreneur, we work hard every single day, but we take the opportunity to diversify our sources of revenue Yeah, diversify our risk, but we diversify our sources of revenue into multiple businesses and multiple lines of business. And so, Frankie, okay, she's going to punch me. So anyway, we have in the room, and I'm not going to tell you who it is, but you'll find, I challenge you to find her, a person who has actually done what we're talking about today. Started it, first level, second level, the rewards of second level, and is continuing to do that. So the reason I bring that up is because it happens, it's possible. Everyday people do it, which means that we can do it individually. And I need you each to believe that, because if we can believe we can do it, it's possible. If you're sitting here and you say, I can't do that, then there's no need in you even being in business. We have to believe that it's done. And in this particular instance, we all know someone who's done it and is still doing it. Okay? Is that a good context? I know it's a long context, but are we on the same page? Good? Great. So, business plan we talked about. Absolutely mandatory that we have one. Does it have to be 96 pages? Of course not. Can it be 3? Absolutely not. What's the most important part of a business plan? Anyone? Most important part? Peter goes right for the strategics. Getting clients. Absolutely. But it's actually the marketing section, because it goes to what Peter talked about. Absolutely. Nothing else matters unless you know how you're going to generate the revenue. The numbers don't matter. I've seen business plans where the marketing section says something and the numbers say something else. Come on. The numbers generate from the marketing section, you know? So, really important. And so anyone who doesn't have a business plan, I want you to contact SBA. Make sure we get one started. It doesn't have to be a work of art. It doesn't have to be a book. It should not be a work of fiction, okay? I need to make sure that we all understand that. But it has to be written. So that's the first part. The second part, solid banking relationships established before you need them. Lisa's here from Wells Fargo. Hi, Lisa. Will you stand up just for a second? Not only does she have money, but she's good looking with money. I mean, come on. Right? Now, Lisa, I don't mean this directly to you. It doesn't matter what bank it is. It's the person in the bank who is your advocate that we're looking for. Doesn't matter what name is on the bank. It's the person who's going to understand your business, learn your business, help you learn the finance of your business, fight for you when you need something, tell you up front that they can't do it when they can't do it, but also help you to learn how to handle the money in your business much better, how to handle it more efficiently and more cost effectively, but also be there as an advocate, so hopefully you'll never need to borrow from them, but if you do, you'll be eligible to borrow from them. That's not a relationship that you start when you need the money. I go to Lisa, I need a line of credit of $350,000. After she finished laughing at me, she's going to say, oh, that's nice, Mr. Moragne. Give me your financials. I have to get my financials done. And so she's going to, she's not even taking me to lunch. She's going to ask me to leave. Send me an email saying, duh. But if I go to Lisa before I need anything, she and I become business friends. I can call her anytime and say, Lisa, I'm really having problems with this. Can you take a look at my business plan? Can you take a look at my financials? You don't need anything. There's no pressure on you. There's no pressure on Lisa. But once you absolutely need her, she is your advocate. And if she can't help you, she tells you, Don, this won't fly. My underwriters won't do this, X, Y, and Z. Let's fix it. You have to have a solid banking relationship with a person inside a financial institution. Not with a financial institution, a person inside a financial institution. I just met Lisa. I like her already. Get her card. That's your person. Okay? Yes? Good. Now, reliable network of mentor and peers. Now, please understand this. None of us none of us gets to where we are or where we want to be without assistance from someone else. Hopefully that someone else is smarter than we are, because we are only as intelligent as business owners as our exposure. No matter how smart we think we are only as intelligent as our exposure. The smarter the people that we associate with, that changes our resource group. The more we learn from them, the more we're exposed to. We need to have mentors and peer groups in our industry, outside of our industry, that we can bounce things off of and talk with. That doesn't mean that I need something from anyone. What it means is that I need to be able to talk to someone who is either smarter than I am, or in a different field than I am, or has a different expertise than I do, and in turn give that back. Be a resource and a peer to them. But we need to have a group of people that we can talk with. Does that mean we have to have a board? No, it doesn't. Does it mean we have to have a formal relationship with a person? No, it doesn't. But it means that you have to get out and selectively identify peoples and groups that you can learn from. Now, trust me, you can't belong to every organization. You can't attend every networking function, and you don't want to. But you do have to, early on, begin to put yourself in the resource group that's going to allow you to elevate. And then when you get to that elevation, you need to find another resource group, not that they're no longer someone that you should associate with, but you need to continue to move up. It's really important that we do that. Board of Advisors. Now, what's the difference between a board of advisors and peers? The board of advisors are individuals who have a vested interest in your success. Not necessarily, it may not be monetary, but I have a vested interest in my client's success. Why? Because their success makes me more successful, which then provides greater revenue for me, okay? You should have a board of advisors. It doesn't have to be formal, but if you want to, advisors. Now, these differ from mentees in that you're looking for advisors, hopefully in your particular industry or expertise, who are doing well, very well, hopefully already at the next level, who now take their years of experience and share it with you. Sheree, that would be the mentee protege program that the SBA has. Large companies take the time and the resources to share with a smaller company, again, with the hope that that smaller company will then become as large as they are. But that large company knows, I would think, that when they were small, someone did it for them. And the large company also knows that if that company becomes successful, it increases their visibility in that segment, because I mentored Peter. That's why he's that's why he's doing so well. I mentored Peter, and Peter was mentored by me, and then we actually form a new resource group. Now, this last part, well, not the last part, but this part is the most important thing that I can tell you today. You have to become a student of business. You have to become a student of business. High school, college, you learn a lot of things that will make you diverse and intelligent. But you don't learn finance. You don't learn business. You don't learn survival. You have to learn those things before you start business, if you can. If you can't, when you start your business, and then study those things all along the curve. There is no manual that tells you how to be a business owner. There's no manual to tell you how to be a parent. We all do it. We all make our mistakes. We try our best. The proof is in that 18, 20-year-old, okay? Your business can't wait that long, number one. Number two, you can't take that chance. Number three, your business doesn't think. And number four, it's your most prized economic asset. Why would you take a chance on something that has such a central value in your personal wealth? You can't. So you have to learn how to do business. I need to know how business works. Not my business, business, the generic, larger term. I need to know how business works. You can read about it in the Wall Street Journal, but I guarantee you that's not going to help you. It's like you looking at the Wall Street Journal and picking the big stock today. That was yesterday's stock, y'all. Okay? Reading Consumer Reports or Money Magazine to pick your stocks, that was last month's stock. You need to know how to run business today. Do you have to go back to school? Please do if you have to. But the internet's there. The internet has everything that you could possibly want. And the question that you must ask is, how does business work? And once you find that out, how does my industry work? And once you find that out, you need to go and find the indicators that tell you how your industry performs on average so you can plug your performance and have something to measure it against. You have to learn how business works. Now, when I say business, I'm also talking about the economy. Because, again, one of the suppositions we came up with this morning is that we have an asset, and it's all about trying to achieve personal independence, right? And it's all about economic wealth. So we have to understand business, not my business, not the generic term, how business works, and we have to understand the economy, not my house economy, the global economy, and how my business fits within that context. Are we on the same page? Have I lost anybody? Do we need to talk about this more? Because this is really, really important. No? Good? Yeah? All right. Very important. Next thing. You are in business at this level to have personal living wage, right? One, okay. The second part is to have personal. Oh man, I'm loving this place. I'm loving this place. And number 3,
Financial independence.
all right, I love that. Part of that has to be the business owner becoming selfish about how they handle their own security. Does anyone know what executive benefits are? Charles, in your own words, please, buddy.
Well, they're a way. Excuse me. They're a way, if you want to, of tailoring benefits within inside a business for key people. So you can select an executive group, and you can really discriminate for that group rather than doing a plan that covers all people, which is very restrictive for small businesses.
Right, thank you. I'm sure SBA planted him, right? I planted Alexis. SBA planted Charles. Thank you, buddy. It's so important that we begin to think about taking care of ourselves. We go into business, we start a 401k, take care of our employees. Normally, we don't contribute initially because we're trying to make sure everything is running. Medical insurance. Before the Affordable Care Act, we provided medical insurance to employees, paid some portion of it. We had medical insurance because we couldn't afford to go out it, but we had a really high deductible, so it would be cheap, and we hoped that we'd never get sick. We probably didn't have any disability insurance at all. Retirement, I mean, when I reach year 10, I'm going to start saving for retirement because I still have 20 years to do it. All of those things that provide us with risk protection and the ability to protect our assets and the ability to continue working are things that we don't think about because they require money to have. And initially, we are trying to not spend money we don't have to, and we consider the fact that if we don't spend the money on ourselves, that's fine because later on we will catch up. But think about this. I'm not even talking about you dying. I'm talking about you walking down the street, twist your ankle, and you can't work for 3 weeks. You're the rainmaker. And by rainmaker, I mean you're the one who actually brings in the money. You're the one who interfaces with the clients. You're the one person who actually makes sure that your business has revenue, and you're probably the one who makes sure that that revenue is collected, okay? Because revenue is great, but cash is king, all right? And so you can bill $1 million if you want to. If the cash doesn't come in, you just have a really nice balance sheet, you know? So you're the one who's doing it all. So you missed 3 weeks of work. Nothing happens in that 3 weeks. No billings go out, and I guarantee you, I don't care how much your clients love you, if they don't get a bill, you don't get a check. I'm sorry, it's just the way it is. And so disability happens to more people more often than any other thing, and we as business owners, that should be the first thing that we do. Before the insurance policy to protect your computers, before the insurance policy to protect your furniture, before the insurance policy that protects the landlord's interest in your office, you should be protecting your interest in yourself. But do we do that? No, because it's going to cost a little bit extra money, and it's something that I can put off because I'm young. Will I get hurt? Probably not. I know I'm not going to die, so I don't need life insurance. I mean, give me a break. But getting hurt, I can handle it. Even if I sprain my ankle, I can still go to work on my crutches, right? I mean, all of those are reasons why we do not begin to think about ourselves. And so at this very first level, I'm asking each one of you to do a couple of things for me. One, begin to think about your business as an asset. Two, begin to think about that asset as an economic unit that has value, and you've got to retain that value. I need you to begin to think about your business from a different context at this level. And again, I say, if we don't change our mindset about business at this level, then getting to the next level is going to be extremely difficult. Also, because we know that most businesses never even rise to the level where they provide the business owner with a living wage. That's the first one. Most business owners, and I don't have stats on this, and I'm sure SBA doesn't have it either, but Sheree's going to have it next time you see it because she's that smart. Most businesses do not provide the business owner with a living wage. They need a part-time job. So it's really a hobby, okay? None of us are there. None of us want to be there. We need to change that mindset. But for those businesses that do provide the owner with a living wage, the next challenge is personal financial security. And that comes from being able to know that you can get as much money out of your company as you need to take care of your family and your responsibility without having to worry about it. That is a big milestone. I guarantee you, that's a big milestone. I was in business 5 years before I felt comfortable enough to take as much money as I wanted. Really, it's a mental milestone, but it's also an economic milestone because you may reach it and still not want to take out as much money as you want, but still you have to reach that point in your business. Now let me stop there for 1 second. Once you reach the point where you're providing yourself a living wage and you're providing yourself personal financial security, I want you to think about something. We should be capitalizing our own businesses. We bring in $100, we spend $100, we owe Uncle Sam because he wants part of it, but we don't have any reserve cash. And so one of the things that happens is people will come to us and say, Mr. Moragne, I want to invest in the stock market. And my first question is, do you have any savings? We don't save. As a country, we don't save. And so what I'm suggesting, I'm not talking about your personal finances, now I'm talking about your business finances. I want you to not spend all of the money that comes into your business account. I want you to take 5%, 10%, you choose the number of that money and either leave it in the account or move it from that checking account into a reserve account. I want you to start that when? Yeah, I love this group, I'll tell you. Think it for me. Now, that doesn't mean that you're not going to raid that reserve account when you need it. Collections are slow, whatever happens. But it does mean that now you'll start building a cushion where you'll have the money to be able to handle those positions when you don't have a good collection. I need you to think that if you start putting 5-10% away now, how much money you'll be able to have capitalized in your company as the years grow just by sticking to that level. Your revenues grow, your 5% gets larger and larger, and you begin to look at the more sophisticated ways of financial management. Now I'm talking about budgeting, cost efficiencies, technical things which we aren't going to talk about today, but they're vital to the first level. I need you to promise yourselves, and then promise me, because I'm going to get everybody's card. I'm going to call you next January, and I'm going to ask you how much money you have in your reserve, okay? And then I want you to send it to me. No, I'm kidding. Well, maybe I'm not. No, but very, very seriously, I need you to promise to do that at this level. I need you to begin to think that you can't spend every dime that comes into your company, that you have to have a financial reserve, and that financial reserve is only going to come from, thank you, Peter, it's going to come from you. Absolutely. So we have a little time to talk about the next level, and we will, but right now I want to kind of recap the first level. The first level of business is where we develop our business into a going concern. A going concern, theoretically, is any business unit that's going to last a year or more. Okay? Can we assume that we all want our business to last at least that long? Okay, great. All right. So that's what we're trying to achieve. We're trying to make our business at this first level self-sustaining. We also want our businesses at the first level then to provide some benefits to us as the business owners. True? Okay. And I know this is a pop quiz, but the first one is?
Living wage.
Lexus? All right. Okay, Lexus, you don't say anymore. Second one is? Security. Whoa, is that a voice from the back row? God. Okay. And the third one is? All right. Whew. I love this. Now, before we go any further, does anyone have any thoughts on whether or not that is a good context for us to be operating in? Do you agree? Don't think it can be done? You don't have the time? You don't want to worry about economics? What? Please.
Don, I have a question.
Please.
We were talking about executive benefits. Mm-hmm. What would you say to small businesses who have retirement and 401ks and annuities, mm-hmm. and then something comes up with the business, they're not able to go to the bank, or maybe they don't want to go to the bank, and then they borrow from their retirement or from their reserves? Mm-hmm. What would you say? Is that a good thing to do, or would you frown on that?
Well, I frown on it because that money's locked up and there's a penalty for using it.
It is, that's true.
And so that's why being able to put away money so that you have liquid cash for those emergencies, which are gonna come. I'm sorry, I don't care what kind of business you're in. There's gonna be an emergency. That's life, okay? It rains, sun comes out, it's winter, spring. That's life. It's going to happen to you. If it hasn't happened to you, I'm here to tell you it's gonna happen soon, okay? So having liquid cash is the most important thing you can do. Both, one second, Charles. Both personally, this isn't a personal finance course, but everyone should have at least 3 months of emergency cash liquid in a savings account somewhere. It may not be earning a whole bunch of money, but you don't have to pay for it to get it back in an emergency. And so in Tia's instance, where that person has money locked up, and it is locked up in an annuity for a certain amount of time, where you get penalized for taking it out, It is locked up in a retirement plan. If it was tax deferred, you have to pay to get your money, which means that if you need $100, you have to take out $150 in order to satisfy the obligations that go along with that $100. Can you see how your money's being depleted? So while if it's an emergency, there's nothing else, we'll plan for it. Well, Charles is right here.
Sorry, I was just going to make an observation on,
Please, buddy.
On that question, because about 25% of Americans raid their 401k as their emergency fund. And it's, totally concur with you, it's about the worst place to go.
Yes.
Because not only is the penalty, but you're also relying on the market price of that 401k. So if you raided it in 2009, it was worth half what it was in 2008.
And that's exactly right. Thank you, Charles. Charles makes an extremely important point, and that is the cost of getting your money has to be a factor in any transaction. So thank you, Charles, for that. Please, go ahead.
I just wanted to ask for some elaboration on distinguishing security from independence. I was thinking that they're one and the same, and so I need you to elaborate. I'm thinking if you don't have security if you're not independent. The only way to security is independence. But
Okay,
please.
let's discuss it. Let's talk about the middle class. We hear it. We all think we're in it, right? The middle class. And the middle class is defined by the fact that the middle class is income driven. Wages, whether it's wages from one spouse or both spouses, darling, is that the right word? Comes in, we spend it. Comes in, we spend it. Comes in, we spend it. If it doesn't come in, we're in trouble. As long as that money is coming in, we have financial security. We feel secure because we can buy what we want, we can do what we want, as long as the money comes in. When the money doesn't come in, we're just like anyone else. We're in trouble. Financial independence is where the security is there, and then you're able to move to the next step where you don't have to worry about ever being without your economic requirements. And my contention is that once you become secure, you have the luxury of then doing things that are going to make you independent. And so security doesn't necessarily mean that you've got a stock portfolio or a wealth portfolio. It doesn't mean that you have assets. Hopefully it means that you have a house with some equity in it. But security just means that you are comfortable where you are and you have enough money to satisfy your needs. Independence means that you don't have to worry about money at all. You're not wealthy, you are secure, but money is not a preoccupation. You want to go on vacation? There's money there. You want to buy a new house? There's money there. When you're financially secure, you're paying all of your requirements now, but anything outside of that may be something that you have to plan for. But you don't have to worry about that because that's extraneous, that's extra. But my house note, my car note, my kids in college, whatever happens to be, all of that stuff is covered. So I'm financially secure. But if you wanted to do something outside of your normal living standard, then that may be something that you had to plan for. If I'm personally independent, I can do anything I want because the money's there. But I may not be wealthy. So what is wealthy? Does anyone know what that word means? You know, people tend to mix wealthy and rich together, and I have no problem with that. I'll take either one. But what does being wealthy mean?
Chris Rock has a great joke about it.
Okay.
Shaquille O'Neal is rich. The person who writes his check is wealthy.
Okay. That's good. That's good. That's good. Oh, please, go ahead.
I was saying Chris Rock has a great joke about it. Shaquille O'Neal is rich. The person who writes his check is wealthy.
That's a good analogy. I like that. Because we handle a lot of entertainers, and their richness is really based upon how long they're getting that check. And planning for their wealth is a whole nother thing. So using that, they're not financially independent at the point that they get their check. They're spending everything. Cars, limousines, everything, But do they have a thing to worry about? Nope. But the first time they're asked to produce their own record with their own money, they can't. And so they're still dependent upon someone else to get their cash. If the NBA team decides they're going to move to someplace else and he doesn't want to go, he's sitting here with us trying to figure out where he's going to the next level. He's not independent. So I contend that independence is after you've reached security, where you don't have anything to worry about. And I also contend before you can move to the next level, your business should either have you independent or very close to independent before you can start thinking about what the future. And I'm not talking about forward thinking now. Forward thinking, again, 3-5 years, we've got to be doing that all the time. I'm talking about what the future, 5-10 years down the road, is going to do for your business, because that's the next level. Alexis, the microphone's coming. This side is really quiet. Is the air not blowing over here? Okay, I'm going to start pointing at people, and
So would you say that, what part is it when your money works for you?
Oh, that's the entire basis of the economic system, my dear. Your money working for you is the entire purpose of having money in the first place. Not going to get into any technical theories, but simply when your money makes $1, that's when your money is actually working for you. And that's what we want all of our dollars to do. So when we have money in Lisa's bank for our business, Lisa is paying us interest on it if we put in the right kind of account. It's working for us. With Lisa, and we put it in a CD, or we put it in a interest-bearing account, or we put it in a sweep account, or something like that, your money's making money, okay? Let's not talk about income tax ramification, because one thing that we all have to understand, and this happens too often, so I'm going to digress one more time. When we start business, for some reason, we think we're not supposed to pay taxes. We think that Uncle Sam is taking everything that we've got, and for some reason, we think we're not supposed to pay this guy any taxes. So if we generate a loss, we don't owe any taxes, we are so happy. We are so happy. I have to pay Uncle Sam a dime. But unfortunately, in order for you to build your wealth, Uncle Sam is going to get his part. I'm sorry, that's just the way it is. And so we need to rethink the fact that we need to be poor in order to get around Uncle Sam. What we need to do is put away the cash so we can satisfy Uncle Sam and then do what we need to do. All right? My job is to get your taxes down as low as possible and to make sure that you've got the money to take care of that tax obligation. Your job is to make as much money as you can. I've had people come to me and say, I'm not going to make any more money, much more money next year because I can't afford to give Uncle Sam this money. And my question is, that is so nuts. 75% of something is better than nothing. And in this country, you have to pay to be here. And so pay for it. You pay your parking ticket, you pay your automobile insurance, you pay everything. Why is Uncle Sam different from that? And why is that? Because, and I'm guilty of this too. I came out of the Internal Revenue Service. I'm guilty of I'm not giving Uncle Sam a penny more than I have to. And I'm going to use every tool in my book to make sure I don't give him a penny more than I have to. Well, that's good, as long as you are also getting your pennies along with him. And if we plan to fail, Uncle Sam doesn't care about us, but we are doing ourselves an injustice. What we should be doing is planning to succeed and making Uncle Sam one of those things that we can't avoid on the road to success, satisfying him so that he stays out of your business, because once Uncle Sam gets in your business, it's not your business anymore. And I can tell you that from almost 20 years of experience as being the guy who went in and large companies, small companies, nonprofits, all around the world. I'm sorry, if I look, there's something that I can find. I don't care who you are. Nothing's perfect. And so you don't want the government in your business. So please, along with changing your economic perspective, also change your perspective about income tax. Okay? Let's plan for it. Let's have the money to pay him. And if you owe him $100, that means you had to have $400, and you still got $300 left. Think about that. If you don't pay him, that means you don't have any money, he didn't get any money, and you don't have any money left. Think about that.
Don,
Scary.
Don, what would you say to those businesses who are in
1 second. Did I answer your question?
Oh, I'm sorry.
Okay, good.
He did. What would you say for those businesses that are in tax trouble? What do they need to do? How
Get out.
What are some of the steps? Right. What do they need to do?
Let me say, most businesses are in tax trouble because of employment taxes, having employees. So we try to avoid employees. That's bad because you're only one person, and in order to generate revenue, you can't do it all. So you have to leverage yourself. Employees, independent contractors, whatever they happen to be. But we get in trouble with employment taxes because Uncle Sam wants his money every single month, and the cash collections don't come in when we need them to. And so when we get to that point where we're supposed to make the tax deposit, the money may not be there. And again, we'll catch up next month, and we'll catch up next month, and it never comes. And Uncle Sam really loves us, really he does. He's sitting there saying, God, everybody in this audience is my friend. But if you mess up, I'm going to come down on you hard because you're not only messing with my money, but you're messing with the money of the employees who trusted you to withhold it and send it to me. So if you're in tax trouble, the first thing we need to do is get out. The first time it's easy. We go in, we make a call, we get on our knees, we plead for you. We get you out. The second time, it's a whole nother ballgame. What we ask all of our employers to do is sign up with a payroll company. Get on full tax pay or sign up with a bank or whatever happens. Make sure that Uncle Sam is out of your business. And if you're having a problem, see a tax advisor. If you can't afford a tax advisor, I would really recommend that you have a discussion, at least a discussion with someone before you try and solve your own tax problem. In a business. Personally, knock yourself out. In business, is what you don't tell them that can make the case, is what you do tell them that can break the case. Trust me. There's new school IRS, which old school don't think as smart as we are. But we're trained to ask questions that may not even be of value to you, you know? I sit and I talk to Peter. Peter, do you golf? Oh, yeah, I golf all the time. At the end of the audit, I know how much Peter spent outside of his business. And he says, okay, well, Peter, your business is fine, but I still need all your bank statements because I need to know where you got all the money to go play golf. And he just said, well, we were sharing. Aren't you a golfer? Yeah, I am. But I need your bank statements, okay? Not a problem. But he was being nice because I was being nice. When you're on the phone with the federal authorities, you don't care what they take, whether it's bad cop, good cop, it's what you don't tell them that's more important than what you do. And so I don't think you should represent yourself, but if you do, talk to someone before you do. Stay out of tax trouble by having a payroll service, and don't play with your employees' money. It's just that simple, okay? That's simple. Yes, Kevin.
How many bank accounts should a business with employees have?
Ideally, you should have two. And the reason I'm saying that is you have to have an operating account and then transfer the money from your operating account to your payroll account. And it's not necessary. You can do it all out of one account. But my preference is that there be an account where you, your payroll company, and I can make sure that Uncle Sam is being taken care of. Okay? Just transfer it out. If it's $200, take it out of your checking account, transfer it over to payroll. Can the payroll company go into your regular checking account and take it out? Sure they can. but I would prefer. So if you have one employee, I probably wouldn't do it. Doesn't make sense, okay? You have 5 employees, still probably not. More than that, I would definitely consider moving the account, okay? So my answer to that, 2 accounts when it makes economic sense. 1, 2, 3 employees may not be, but I talked to Lisa and I asked Lisa for a free small business account that doesn't cost me anything. Then it makes sense, you know? If she says it's going to cost you $99 a month to get that account, then I wait to have 1,000 employees. I'm kidding.
And you said accounts, he said banks.
No, but I think he meant bank accounts. Yeah, because as I said when I started this, doesn't matter the bank, it matters the bankor. Okay? And
Don.
so, yes.
What would you say, a lot of small businesses, well, maybe not a lot, but I know of some who go into business and they don't feel that they need an accountant or a lawyer. What would you say to that?
I would say early on, you need to establish at least a talking relationship with people who have the ability to make important decisions with you. So if you can't afford an accountant, fine. Find one that allows you to come in and talk to them for an hour, 2 hours, and pay for it, okay? Get a bookkeeper. Whatever you need to do to keep things running, do it. But have a relationship where you can talk to these people. Understand this. Accountants are really smart. But if you get in trouble, it's the attorney who gets you out of trouble. So I can tell you, be an S corporation. From a financial perspective, I think it's going to be better for you, okay? The attorney might say, that's the craziest thing I heard. I need you to be a C corporation or an LLC. Now, while I might have a discussion with the attorney about the merits of that, the final decision should be made by the attorney, because if anything happens, that attorney is going to be the one standing in front of the judge, making the argument. When I walk in, the judge is going to say, sir, are you an attorney? I'm going to say, no. He's going to say, sit down. But I told, sit down. One more word out of me, contempt of court, I'm in jail. So am I going to say anything? I'm going to sit down. It's the attorney. So it's very important that we understand that we have to have a relationship early on. Do you need an expensive relationship early on? Probably not. Good bookkeeper, an accountant that sets you up to make sure things are being done right, accountant oversees you, but you should have the relationship with the accountant and attorney where you can sit down even on an hourly basis and discuss what's on your mind. Okay? Good. So, first level, before we go to the next, is anyone has any questions about the first level? Now, again, realize at the first level, we're talking about planning, right? We're talking about business planning, right? Did we talk about budgeting? Ooh, what a word. Did we talk about budgeting? No, we didn't. But we did talk about cash flow, didn't we? Now, budgeting and cash flow are 2 different things. And the reason I want you to think about cash flow now and not think about budgeting is because cash is king. If the money doesn't come in the door, I don't care what kind of business you're in, you're not in business, okay? A budget helps you handle your money better based upon what happened in the past. Cash flow management makes sure that you have money, and then you can handle it better. So it's really important that we understand that when I say to you, Scott, you need to have a budget, that may not necessarily be what you need or what I'm talking about. Gilda, Ani, need to have a budget, okay? Both on the personal side and on the business side. What we're basically talking about when we use these words, budget and cash flow management, is making sure that you know where your money's coming from and where it's going. That's basically what we're talking about. And even in personal financials, we don't have a line item for saving. This country does not save. Our parents, maybe our grandparents did, especially the ones who came out of the Depression. Yeah. Anyone coming out of 2008, I guarantee you, they're saving. In every generation, there is a defining event that determines how that generation is going to respond to certain situations. And and we don't have that. 2008, but we were all adults in 2008. We don't have that. So we have to become savers. And in our personal budgets and in our business budgets, the very first line item under expenses needs to be saving. It's normally the last line item on a budget. You know, house note, car note, food, groceries, you know, stockings, and then savings down there. I need us all to move it up to the very top and make savings the first. And again, if you have to go and use it, that's not against the law, but at least you have it to use. Most of us don't have it. As Charles shared with us, most of us don't have retirement plans. And those that do, they're underfunded. And those who have all of their funds in some mix of stock market that isn't diversified, they may be wealthy on paper, but as we learned in 2008, you can't eat paper. You can't spend paper. And when the paper goes away, you're in trouble. And so we have to start saving. Business and personal. Have a stash of money in your personal life, in your business life, that you have that continues to be liquid. Make sure that amount continues to grow. And then think about making your money work. It may be working in a CD. Again, you can get access to that. It may be working in the bank, but it's not working really hard, but it's still there. After you have that cushion, then really put it to work. Think about going into the stock market. Think about going into mutual funds. There are a lot of things that you can do that are low risk in the wealth vein. There are a lot of things you can do that are high risk. But as Alexa said, we've got to make our money work for us. And that's part of where we need to be at the very first level of our business. Personal security and then personal independence has to come from this asset that we have in our hands, that we have to believe is an economic asset, and that we have to protect and we have to grow. And if we achieve all of those things, then we can start thinking about, now, how do I add value to this going concern that I've developed? How do I make sure that at some point in time in the future, a third party, Brenda, looks at my company and says, wow, I'd like to buy that because it has some value. That's the next level. How do I then take this going concern and add value to it so now that it's attractive to a third party and it's able to build wealth for me? Okay? So are we comfortable at the next level and we want to talk about, at the first level, and we want to talk a little bit about the next level, or we want to keep talking at the first level? I'm here to talk about anything you want. Don't be shy. Next level? Okay, I got one next level. Going once, going twice? Yeah, no. Okay, great. We have a concept called shareholder wealth. Okay? Personal wealth, that means I'm well off. Shareholder wealth, that means that I own a company, and that company is also well off. So remember, in law, if you're incorporated, there are two people in the room. It's you and your corporation. Okay? Now think about this, and I need you to really think about this. And even if you're a sole proprietor, just consider your business separate and distinct from you. When I talk about wealth, I'm talking about your wealth and independence at the first level. And then at the very next level, I'm talking about your company. Your company, the shares, stock, equity that you have in your company being a separate set of wealth. That's shareholder wealth. The next step after that is equity wealth, which means that Scott sees my company and he believes that if he invests or purchases my company, the return on his equity will be greater by buying my company than it would be in going into a similar situation with similar risk. That's the ultimate. That's when you can sell your company to someone else. That's when your company actually has wealth. Your business has wealth. I'm going from my company making me wealthy to my company generating wealth to my business generating wealth. That's the next level. You see the increment? We start here. We take care of ourselves. We take care of our families. We make sure that we are doing all the things that are necessary so that we're independent, secure and independent. Then the next thing we have to do is make our businesses give us a return on investment that is separate and distinct from ourselves as individuals. And then the third thing we need to do is then make that business have value to the public. Think about it this way. I invent a paper reader, okay? I press a button and my paper reads, okay? And I put that business in place and it makes me a bundle. That's great. And then, but while it's making me a bundle, there's still no value in the company itself. I've taken care of my first level, okay? Now I have to put things in place that brings value to the equity that I have in this company. What could that mean? That could mean bringing in employees so I can leverage, make more money. That could mean strategically planning to get into other markets that have low margins. That could mean beginning to monitor my gross profit margin, which is the first line on the financial statement, which tells you how much of each dollar you made you had to spend to make that dollar. It means definitely cash flow management. It means budgeting. Also means taking care of Uncle Sam, but it means at the end of the day, you planned for the performance of your company, and you also plan to have a respectable net profit that is reflected in the cash that you have in the bank. Okay? So here, I'm okay. I'm fine. But I may not have a big net profit, and I may not have a lot of cash in the bank in my company. But I'm fine. Okay? We agree with that? That's personal independence. My business may not be the best looking business, but I'm okay. I'm taking care of all of my needs. I'm independent. Then I need to move and make sure my business now becomes okay. And what that means is if I've got a $1,000 net profit, then I've got to have at least $1,000 in the bank. Way too often, I've got $1,000 net profit and I have $10 in the bank. When you start to build shareholder equity, you're actually building the amount of money that's available to the business. Again, outside of me, I'm covered, to the business. That is really the important next step. Shareholder wealth. Do I own the shares? Yes. But now, not only am I wealthy with my house and whatever else I've got, but I also have my business, which also adds to my wealth. 2 pots, okay? The third pot, and this is the big pot. This is the big pot because at that point in time, you have shifted your entire paradigm from being a business owner to being a CEO. Let's define terms. Business owner. I start a business, it's my baby, I'm running it, I'm doing well, no problem. But I'm still mired in the day-to-day operations of the business because I gotta keep it going. Okay? All right? I'm a planner because I have to plan, I have to keep it going. I'm forward thinking. I know what I want to see happen in the next year, maybe even 3 years out. CEO. The CEO is a future thinking strategic being. Now, why does the CEO have that luxury? Because all of the planning stuff has been done. It's a system. Or they've got other people doing it for them. Whatever. It's done. I now have the ability to sit here and say, what if? What if I put a plant in Indiana? what would that look like? Over here, I'm not even thinking about Indiana. I'm trying to figure out, now how can I get this guy pay me net 30, you know? How can I net 10? Should I get a retainer? Should I hire that client? It's immediate. It's still immediate here because now it just moved from me to my business. Over here, my business has equity. My business is an asset. It's running well. Now I have the luxury of future thinking. Hey, Peter, tell me, I don't want to do this for another 20 years. So what do I have to do over the next 20 years to make this attractive to someone else?
I can give you my card and help you out with that.
Please. Give me your card, Peter. That's what a CEO does. A CEO has the hard job of future thinking as opposed to forward thinking. And forward thinking, again, these are my definitions, are looking forward a year, 2 years, maybe 3 years. I mean, that's the time frame that you can plan for in a business. But when you're using strategy and you're strategizing, you're looking out as far on the horizon as you need to in order to kind of think about what's going to happen and what you need to do in order to happen. Do strategies change? Of course, that's why they're strategies. But it's really important. And so, definitions, business owners, planners, CEOs, strategizers, forward thinking. As a business owner, do you need a CFO? Early on, you need a good accountant. That accountant may not be able to have all the management skills that a CEO needs, but you need a good accountant. When you get to the point where you're thinking about not what's happening this year, not what's happening next year, and you need to look further, then you need someone who can take the numbers that you absolutely have from your accountant, right? Right? Everybody's got the numbers? I don't hear you.
Yes.
Oh, good. Phew. Okay, good. So let's start over. So we're going to take the numbers that you already have, right? Okay, good. And we're going to look and see what the future is going to bring based upon these numbers and a bunch of assumptions that the CEO and the CFO sit down and strategize. Now, I mentioned to you that the best clients are clients that listen to the CFO because he's the smartest in the room. But I also mentioned in those rare instances, you get a client who's smarter than you and challenges you to think. Those are the best instances for a CFO because a CFO has to know the business that they're advising on, but they can't think of everything. And regardless of how smart we all are in some kind of a box. We might move out of a box every now and then, but you're still in the box. When you have someone who's smarter than you, they draw you out of that box. It might only be for their particular industry, doesn't really matter, but they draw you out of that box. And everything that you learn, you extrapolate and you share it with someone else. That's the value of having mentors and advisors. Everything that you learn, you then become a mentor. You then become an advisor. You then share it with your employees. That's how great things happen, when we share knowledge and we share experiences, okay? So I want everyone here to begin thinking right now that we're going to do a couple of things. One, we're going to change our perspective about our businesses and start thinking of them as an asset, an economic asset to which we have to bring value today. Two, we're going to start thinking that there are three things that I want my business to provide for me personally. And I'm not going to ask you what they are yet, because we all know what they are. Absolutely. Thirdly, I want you to begin to think, I cannot spend every dime that goes into my business bank account. I've got to take some of it out, you decide how much, put it in a reserve so I can start to capitalize myself. 4, I want you all to go talk to Lisa. 5, Brenda's a business coach. If you're not a person who is used to thinking for themselves, talk to a business coach so you can start developing the mental processes where you can start to think for yourself. Trust me, thinking for yourself is hard. I guarantee it. So Brenda's here. And there's a person in the room who I am not permitted to name, but if you find that person, who has done everything that we're talking about, talk to that person, because that person is the smartest person that I know. And since I'm the smartest person that you know, you know somebody smarter than I am. Okay, good. So that alone is worth the $15, folks. Once we do those things, then I want you to start thinking that I'm no longer the president of my company. I'm no longer the owner of my company. I am a CEO. And why do I want you to start thinking about that? Because if you change your mindset, and changing titles can change your mindset. If you change your mindset, then you're going to start acting and responding and planning and strategizing more differently than you will if you consider yourself a business owner. A CEO is more important in my mind than an entrepreneur. Again, entrepreneur in my mind is just a person who has more than one business. They're different definitions, but still more than one business, their risk, it belongs to them. Even more important, because you can be a CEO with one business and you can be a millionaire, your business can be a millionaire, and you can sell it to someone else and become a trillionaire. Easy. So the dot-com companies and the internet companies that never make a dime and they sell for millions of dollars don't fit any of this paradigm, do they? You know, somebody invents something, you know, Twitter never makes a dime. 5 years from now, they get $1 billion from it. Didn't do any of the stuff we just talked about. So why are we talking about us working so hard and planning so far, you know, when people are just doing, it looks like that. Amazon has never made a dime. It still isn't making any money. Why is that? It's because someone else saw value in that business entity, and that's wealth, okay? They might have bypassed everything we talked about. They might have been poor up until the time that that big company bought them, but someone else saw value in that. Did they purposely put value in it? Maybe, maybe not. But the point is that it doesn't matter how people perceive the value. It has to be there before it's perceived. And for us in this room, unfortunately, we can't plan on magic. We can't look forward to maybe to have value. We have to make sure we do the things to give our businesses value. That's what this whole thing is about. We have to be the ones who bring value to the company. How much time do I have? Should I stop talking? I'm okay? All right. We have to be the ones. And so at this level that we are now, my contention is that it's an economic level, it's an asset. What do we have to do? We have to begin to think economically. Beginning to think economically means we have to do financial management things, business plan, budgeting, cash flow management. And again, the fact that you have a bookkeeper and accountant is a given, okay? You have to have all of your documentation. You have to have historical documentation. You have to have tax returns. You should have them timely. If you're not getting that, then you need to talk to whoever's doing it. Because unfortunately, whether you need it or not, everyone else needs it. Okay, it's just that simple. Everyone else needs it. So if you don't have it, that's great, but don't go talk to Lisa. Don't waste the time, okay? Once that's done, then the question is, how do I use that information for me to get that first step, personal independence? How do I use that information for the second step, shareholder independence? And forget the CEO part of it now. That's what we've got to do. We've got a budget, business plan, cash plan. We have to plan at this level with ourselves as the impetus so that we can be personally independent. And then once we reach that point, then we can start thinking and doing for other things. I contend for you, if you don't take care of yourself first, the rest of it really doesn't matter. It doesn't matter. If I am not taking care of myself and my business, why do it? I mean, seriously, it's not easy being in business. You know, you work all day, you work all weekend, you think about it all night long, right? Really, you know? And everything good that happens is yours, but everything bad that happens is also yours. You know? Come on, that's really important. Really important. And so I've been in business 27 years. I started when I was young. I'm old now. And I don't want to be old and poor. There's nothing worse than that. You know? So let's start now because, you know, I can't do anything about the old part. You know, you guys have to worry about that yourselves. But the poor part, we can do something about together. We can definitely make sure that that doesn't happen. And I guarantee you that people who are employed now have the responsibility for their golden years. And while the lip service is there, nobody is telling them how much they've got to put away in order to survive 20, 25 years. And it's a lot. It's a lot. It's a lot only because of, I'll get to you in a minute here, only because of inflation. I mean, that just eats money up. As opposed to working for you, it takes it away. In business, you only have so many earning years where you are the rainmaker, where you're able to control that revenue, okay? You don't want to be the one the day after you can't control that revenue where you don't have enough money. You're too old to get a job. Nobody's going to hire you. Walmart is full, y'all, okay? All right? And unless you can smile really nice, you're not getting a job there. And so what do? You wasted 20, 30 earning years. You can't do that. We have to take care of ourselves, and that asset is what's going to do, okay? I thank you very much. I thank everyone. We're going to have Q&A coming up. We touched on the next level, but again, we have to get prepared for it. I hope that the outcome from this first level is that we'll all begin to think, and the outcome is that we all begin to think like CEOs, okay? Thank you.